Let's take a look at some charts on Tezos from this week's article on Brave New Coin. So Tezos is a proof of stake coin, different from a proof of work coin. Essentially, you use the coins themselves to validate the network through validators. There are many versions and variations of this with different bits and bobs and different chains. I like to look at all of them together, compare them, even though some of them are extremely different. Comparing a feeless chain like Tron in the yellow here is probably criminal when you're comparing it against a chain with fees. So I've actually had to exclude Tron from the transactions per day comparison, for example, because they're in the millions and everybody else is in the thousands or hundreds of thousands. So clearly an outlier. It doesn't make any sense there. You can see that noted on the fees here. They don't have any fees. So the number of transactions could just be anything and whatever you want it to be. I had to exclude ADA as well from the total daily transaction volume because recently, due to some network changes for them, that number is in the millions and everybody else is way lower. So you might say that's an unfair comparison, but I think in due time, ADA's daily transaction volume will come down substantially. And then with NEO, I don't know why this is always higher than everybody else. I'm guessing there's some goose in here. There's something going on. But if you look at Tezos, it's second to ADA. Now ADA is a newer proof of stake coin. Again, they had some changes in their network recently. I won't go into specifics, but they basically added proof of stake. They transitioned to proof of stake. In general, Tezos is near the beginning, top of the pack in most every metric. They're leading transactions per day, which I think has a lot to do with staking and not necessarily economic utility or activity, people sending value back and forth. There are no dApps on Tezos that I can tell. There are no security tokens yet that I can find. So if you're a viewer and know of that information, feel free to comment below. You can also see that Tron's daily active addresses are much higher than everybody else. Again, transactions per day, daily active addresses, and fees all go hand in hand, really. So as a whole, I'd say Tezos, amongst the proof of stake coins, is doing fine. You know, the real thing is, for the market cap, does it make sense if you look under the hood as far as what's going on with the chain? You know, is the market cap justified, basically, when you compare it amongst its peers? And I think arguably you could say, yeah, probably. It's basically at the top of all these metrics except active addresses. So it's probably where it should be. Looking at value staked in USD on all these proof of stake coins. Now I excluded EOS from that graph because you can't get reliable data, at least I can't, on EOS for those metrics. Again, it's a feeless chain, so most of those metrics are kind of pointless anyway, to be honest, because they're just in the millions and none of it really matters. So XTC's got the most notional value locked in proof of stake at around 1.8 billion. To me, this kind of just says there's not much else to do with Tezos at the moment. Like I already said, there aren't any dApps that I can find. There aren't any security tokens. You know, nothing of substance yet there other than a chain where you can basically collect interest. These are the list of the validators, which they call bakers on the chain. Really great site that breaks all this down. My Tezos Baker tells you the yield and the capacity, and there's some, I'll call them idiosyncrasies because I have no idea really what the distinction is, but there's some metric about capacity and whether or not the validator has to buy more capacity to essentially host more staking. You know, see these in the red. That means they're close to their limit, I believe. So I don't really know what that's about. Very important as a validator. I don't think as important as a just general proof of stake user. And you can see these have variable fees. Now what I like to do is break down, okay, how much is on an exchange? Because if it's already on the exchange, it's not really locked. You can basically, it's like putting it between your checking and savings account in a bank. You can move that money around with a click of a mouse. So it's not really locked. It's not like a certificate of deposit or vested shares or anything. It's not locked for a specific period of time. So coins on an exchange are specifically vulnerable to being sold, panic sold basically, or just sold for any reason. So in total, about 20% of the total circulating supply is held on exchange bakeries, and there's all sorts of other issues with centralization and governance, where if there's a governance dispute and it's between the exchange and the user, the exchange will probably vote in their self-interest, in which case users would be incentivized to leave that exchange. But at any rate, Coinbase is leading pretty handily amongst everybody else. Binance came in at number 2 this month, followed by Kraken. So if there's ever like a massive price volatility discrepancy change, I'd expect it on Coinbase because there's just a ton of coins just sitting there waiting to be sold, right? This isn't to say that most of these are like dumb money or weak hands or anything like that. It's just proximity. So if they're already there, they can be sold at whim, fired at will, basically, right? Looking at transactions per day and average fees, you can see transactions per day definitely at the higher end of the historic range, between 36 and 40,000. Definitely dropped off a bit since the all-time high in price. What I don't like is seeing fees rise and stay high. This typically indicates some sort of scaling pressure that's not being alleviated. Now these fees are super low compared to other chains, but I think it's important to look at the relative picture here, historically, where transactions were, where they are now, and the magnitude of increase in fees here. This is a bigger deal, I think, if you're a validator or you're an exchange. It's great if you can move a number from one ledger to another, because then it's off-chain, right? So if I'm staking on an exchange, it's kind of feeless for them in some regard to distribute it to users. But if you're a baker, that may have different implications, a non-exchange baker. So maybe these fees are being addressed somewhere that I'm not seeing or reading about. But the issue is if this isn't thought about now and they keep increasing, then it becomes a critical issue where all sorts of stuff breaks down. But again, if everyone's staking, 80% of the network or more is staking, then nobody really cares, right? If nobody's moving Tezos realistically for value beyond staking, I don't think most people care about fees at the moment. Looking at NVT, the line here, inverse metric of economic utility, and monthly active addresses, you can see monthly active addresses basically at all-time highs post ICO distribution, which is what this spike was here. Continues to increase, which just says to me that there's more and more people staking. And you can see these little blips. I don't know if it's like every 3 days or whatever it is, but likely staking related. NVT, probably a garbage metric for Tezos because of the staking. And again, that goes back to, do you view staking payouts as economic utility? Is it really important as an indicator for on-chain usage? I don't know. To me, I don't really care about the staking reward on-chain activity. I care more about users transferring value or users interacting with dApps or that sort of thing on the chain. So it's low. It's at the historic lower third. It's been increasing since the April drop. So in a vacuum, it's bullish, but underneath the numerator and denominator, it's difficult to say whether or not it even matters. This is the Google Trends, and you can see Google Trends actually hit an all-time high when price hit an all-time high. Pretty interesting there. It's since come down, obviously, but it's definitely higher than it has been historically for most of its lifetime, I think. So anything above 25, just as a general anecdotal thing that I've noticed, it's usually pretty bullish. Most coins are below 25. Let's look at technicals. We have the Bitfinex open interest, yearly pivots, 50, 200 EMA, VPVR, volume, and RSI. First thing I notice is the volume, just because it's so neatly descending stepwise thing. Typically that indicates there's something brewing in price, whether it be a chart pattern or a volume explosion getting ready or coiling, consolidation, something. And for the most part, that's true. I think it's basically consolidating at an all-time high, right? Like, all-time high was what, 350-ish, and it's around 253, something like that. See, there's a big VPVR node here. There's a big yearly pivot level here. So 350, 470, whatever this is. These are all support resist levels, as is the $2 level. See, there's tons of support below $2. So I really don't expect this to dip below the 200 for an extended period of time. If it does, it's likely because something else happened on another chain. So if the ETH staking stuff goes nuts, I can see people rotating out of Tezos and into ETH, for example. I really don't think on its own volition Tezos is going to roll over here. And I don't see a bull or bear div on RSI or volume. Long shorts look fine. I mean, most everything on Bitfinex isn't that long on the USD pair by a wide margin. So there's nothing crazy here. All in all, definitely bullish. Definitely more bullish than most coins at this point of the year. Look at the Pitchfork, which is just a trend channel with specific rules. You pick 3 anchor points, and it gives you a projection. If it's projecting up, it's bullish. If it's projecting down, it's bearish. And you can see we're definitely in the danger zone as far as where the Pitchfork wants us to be. The Pitchfork wants to be back, or Pitchfork wants the price to be at the median line. So that's at 725, which is the new all-time high, obviously. Should the rate of change continue? Now, if we just sideways and kind of puke out of this Pitchfork, then you say, okay, Pitchfork is over. That rate of change is likely done. It's going to need to reconsolidate and figure some stuff out. But if this does pull up, 725 would definitely be the target I'd keep in mind. Looking at the cloud, it's definitely bullish. It's above the cloud. Cloud is bullish. TK cross is bullish. The only issue here is it's below the Tenkin now, this light blue line. It's just above the cloud. So this could begin to roll over through the Kumo twist here to the downside. Other thing I saw but didn't really mention in the article is this Adam and Eve inverted possibility, or just M double top possibility. There's another M double top here that sort of puked out with the rest of the market. So this is going to need some higher highs, some bullish momentum. Otherwise the cloud is just going to zero out, and the trend is going to zero out, and the Pitchfork is going to be nullified and all that sort of stuff. You could argue as well as a cup and handle situation, this cup handle. So any higher high here would be a long entry signal in that regard, and it's supported by trend metrics. So higher highs good, lower lows, which at this point honestly look more likely just because of how neutral everything is. Definitely tell you to be careful longing this. And looking at Tezos BTC, again looking at all the same stuff, cloud 200, VPVR, volume, RSI, open interest. Open interest is basically 50-50. It's interesting this yearly pivot called the top. Again, these print January 1st and don't change based on the previous year's highs and lows. So it called the top twice pretty handily. If anything, this looks like a multi-week ascending triangle so far. So I can see it getting rejected again here and then testing for a higher low. The cloud doesn't know what to do because it's just been a sideways ranging mess. So in a vacuum, this looks bearish because everything on the cloud is bearish, but it's still above the 200. It's still at the yearly pivot. If anything, it's probably just going to bounce around until it makes a decision. So I'd say it's trendless but leaning bearish, but the multi-day 200 support, however you want to distinguish that, definitely still holding. Downside support's at around 20,000 sats, whatever this VPVR level. So between 18 and 20 is the level I'd watch for if it breaks the 200. If this does confirm as a higher low, I'd expect it to retest previous highs, this yearly pivot R2 at around 38,000 sats.